All right. Had to re-record the last video, didn't turn out like I wanted to, and I'm a perfectionist, so I'm starting over. So let's get to it. Welcome to Funding Friday, take two. Today we would like to discuss first-time home buyers, or anyone if you're looking to purchase. Get away from the myth of you need to have a W-2 to qualify to buy a home. There's a lot of programs that are eligible for people where that's no longer the case. So I want to discuss these options, give you a strategy. A lot of times when you are not able to purchase something, it's just you don't understand the strategy that the lender is offering or actually proposing for you to do. And once you understand the strategy, it's almost like playing a game at that point. You know the rules of the game, you'll be able to win the game. So I'm here to help you win, and I have experience in lending over 25 years. I worked for the biggest of the biggest from Wells Fargo, U.S. Bank, BBVA. So I worked in international banks, and I've understood and learned at a young age about the strategies that can help you be successful. So let's talk more about the different options you have and make sure you're successful in purchasing a home. So the challenges that people have, they think they need traditional W-2 income, meaning that you work for the same job, you work for the post office over 2 years, and you can show proof of income with a paycheck. So things kind of changed after COVID. You have a lot of people that are digital nomads, or they also may be like the gig community. They may work for Uber. They may be a bartender. Um, they just may not go to an actual like um, union job or work for the state, like things where when our parents were younger or grandparents were younger, a lot more people want to be self-employed and want to be able to control their time and control their destiny. So this is the type of people I want to focus on this week and let you know that there are services and there are banks and loans that work for you. So there's alternate forms of income. So 1099 income. So some places in California for sure, they don't want to have to pay benefits to people. So they'll pay them 1099, and that way they don't have to worry about workman's comp and things of that nature. Some people they may be married, so their wife could have a W-2 job, and then they could be a construction worker and get the insurance through their wife. So there's nothing wrong with that. So when those situations, we use their 1099 and we can help them purchase. They also may be more of a cash heavy business, and that's okay as well. If they're cash heavy, we just have to show bank statements of the money going into the business. And if you were, let's say, you sold a business, and like I had a friend sold his business for $10 million. For him, they would look at, okay, if he's buying something, does he have enough cash in the bank where he could make the payment on this for at least 3 years? That's kind of the way they look at it. Um, so you just because you don't have a job, let's say you've received money, some people can receive spousal support, so alimony, child support, those can count as income. What other things people can that are kind of off the wall I can think of? Well, anyway, tax returns will be something that they would look at, um, and they if you have not filed your taxes, you just have to show that taxes were amended, and then either your tax advisor, your CPA, would work with the bank to show that everything was filed properly. And typically, some type of 2 year consistent history is sufficient. Um, Special programs for first time home buyers. Everyone knows about the FHA loan. That's usually the one that people are focused or turned to. VA loans, they also will accept alternate income, USDA loans, which is one I focused on last week. Those are always investors that do. Another one I can think of is like DSCR loans. That's more from an investment side. So as long as you're putting down 25% and the property for the rent um, over takes the actual monthly payment, they don't care because you're putting it down such a large down payment, and you're showing proof of intention to rent it out. That works typically fine for that bank. Pretty much all 50 states use all the programs that I mentioned. DSCR, USDA may be certain counties that look in certain parts of the area because that's based on population, but most everywhere it has VA and FHA and will accept it. So any state I can think of, you can buy. Building alternative credit histories, there's ways that you can do that. One would be a bank account. They would look at your last 12 bank statements, or some may even look further. But if it shows a consistent deposits going into there, and those deposits are enough to cover the payment, they can take that. Utility bills are a way to build your credit up. Let's say you have low credit and you don't have credit cards or car loan, then you could start to make sure your utility bill counts as a payment history. They may make sure you pay it on time. So that's important to do. I know sometimes I'm bad at that because I don't check the mail, and then I'm like 2 months behind on SDG&E, and I got to pay it with the late fee. So make sure if you focus on getting the home that you really hone in those things and you're not late. Just because it's terrible, I'm late and I have the money to pay, so that's a bad thing. Next would be rent. Nowadays, you can even show proof of rent that you paid on time, letter from your landlord, or they even have services where they show that the rent is paid, and it helps build your credit score up. Pre-approval process. One thing you want to do is gather income documents. So, like we talked about, it could be tax returns, it could be pay stubs, um, proof that you are making money. Bank statements also is what we can use as proof. A actual contract. Like let's say you're general contractor and you got a contract with the government or the city. If you can show proof of that contract, that also can be something to show proof of income. As far as like having all your documentation ready, one thing I want you to emphasize is if you're looking to buy a house, like a lot of people go online, start looking at houses and whatnot. I recommend you speak with a actual expert, someone that's been in the industry for a while. Um, Not to say that people that are just in the industry don't know what they're doing, but there's different cycles and waves that have happened in the last 25 years. And if you just got into the industry in the last 2 to 3 years, you haven't gone through the cycle yet. Like right now, we're going through a cycle. For me, like I've been in the industry, I think since '96. So I've been through tons of different cycles. I've seen the markets go up and down. I've experienced different programs. I'm seeing certain programs come back into fruition that they said it would never happen again. So I'm a little bit more seasoned than somebody that's been in the industry the last couple of years. Not to say that they can't help you, but I just for such a big purchase, I would want someone that's a little bit more of a veteran status that knows the industry, that they're not going to be surprised, or there won't be any surprises for someone like me because I've seen just about everything. I would be shocked if I haven't seen everything, but I would recommend to get with an expert when it comes to that. Um, don't just get pre-approved. Make sure you get a full commitment letter. How pre-approval just means they pull your credit. Once they pull your credit, they're saying, okay, you have a good enough credit score to buy, but they're just going verbally on what you say you make a year, verbally on what you say your assets are. When you get a full commitment, they actually go through your bank statements. They actually verify your employment. They actually look at your pay stubs. So then the underwriter looks at this, and you don't need to have a home to get a full commitment letter. You just apply with that loan officer. He gets all your financial documents, submits them to underwriting. The underwriter reviews your home without an address, or reviews your loan without a home address, and then they basically stamp it, approve it. That way, you're able to purchase. So let's say, for instance, I got a commitment letter for $800,000 to buy a home. As long as I don't go over 800,000, and the home passes the appraisal, that loan is going to close because they already verified my income. They already verified my assets. So as long as I don't lose my job or quit, or I don't go out and buy a bunch of expensive cars or buy a second home, and everything in my financial picture stays the same, then that means I'm going to be approved for that loan. So that's something to know. And then that way you can go in confidence when you make an offer. You have cash in hand, no different than somebody that has cash in the bank account trying to buy for cash. It's the same difference. The money's going to go to title escrow company, and they're going to hold it for closing. So it doesn't matter where the money is. It's not like you're bringing a duffel bag and dropping it on the table and buying the property, because you know this isn't back in the old westerns. But um, other tips for success: maintain low debt. So some of the things you want to do is be very disciplined about your credit card balances, any outstanding debts that you have. When you buy a house, this is a commitment, so you have to be prepared to be in this for a longer journey. It's not just like I'm going to be here for maybe a year, which could happen. I mean, sometimes if you're a veteran, you could be stationed here and then move somewhere else. But most people that I know, like I have a friend who bought a place in Hawaii. I went and visit him. He's like, "Yeah, I'm probably going to sell it." And I was like, "Well, why would you sell it? You got it at such a good rate, interest rate wise, and the payment is it something you are struggling to pay? I think it'd be better for you to keep this property and always have it as a vacation. And if you don't want to like set it up on Airbnb, or you could just rent it to other military people because he's in the army." So once he's talked to some of the other superior in his office, they agreed with what I was saying, and it just gave him a different point of view. So no matter what, he'll have a place in Hawaii, and as history shows, um, they're not building more land. So the less land there's out there, the more the value goes up as the population grows. So chances are his property is going to continue to go up as it has, especially by the time he retires. As far as like saving your down payment, there's that's something that you definitely want to do. The more money you put down, the less risky you look to the lender. So that's definitely a thing that I would say to do. Well, another thing I would also do is once you figure out how much you are approved for, figure out how much the new payment is. Chances are your payment's going to go up depending on how much money you put down. So then be disciplined and start making a savings account where you pretend you're already making the new payment, and you pay your rent, and let's say it's a difference of $2,000 a month for the new mortgage payment. Then I'm gonna start saving $2,000 a month until I find a house, until we get ready to close, and that will give you more of a buffer. You look more what would you say? You look more stable to the lender because you're showing a proof of saving $2,000 a month until you purchase the home. And then you have options. You can put that money down on the home, or you could use it, to buy furniture, or something else, instead of putting it on credit, or you could put it on credit and pay those credit cards off right away. So it just shows you more fiscally responsible. So that would be a tip I would give you. Co-signers or co-borrowers would be a way. Let's say you don't have a big credit history, so you look risky, but you could maybe have someone co-sign for you, or maybe if you have a roommate now, maybe they, you want to make sure that this is somebody that you really want to go into business with, but you guys could use this as a business strategy. We're gonna buy a house together, and in the next 5 years, our goal is to make the house nice. We sell it, we take the profit, and then you and I could buy our own house, or maybe we buy this house, we keep it, and then we move to another property. But yeah, having you guys work as a unit is a very smart thing. A home is the only investment that you could really buy, put no money down or put a little money down, and it actually appreciate just by you living in it. You don't have to market and get new customers. You don't have to do all these other things other than live in it, because like I said, they're not building more land, so the land is worth something. No matter the condition of the property, the better condition you keep it in, obviously it's going to maintain value. But even if you did nothing but made the payments, chances are the value is going to go up. Um, Another thing I would say as a tip is prepare for, anything that could happen to the home, because when you buy it now, you're responsible for maintenance. You're responsible for, decorating it or whatnot. If something were to happen, there's no landlord. You are the landlord. But that's not a thing to deter you, because if you don't want to do the lawn service, you pay a company to do it. If you don't want to do home improvements, you pay general contractor to do those things. But just be prepared, because those are things that you could be responsible for. Oh, another tip, you can get home warranties now. So let's say, for instance, you're not a very handy person. You can pay, there's a company I know of, oh, United Whole Shield, I think is what it's called. Oh, it's not Whole Shield, pardon me. United Home Shield. United Home Shield, that company will actually do a home warranty on your actual home, so your windows, your roof, um, anything from foundational type of stuff. So if you had anything with plumbing, but then they also will warranty your appliances, ceiling fans. I remember I had a house and electrician came out, and you pay like a $50 to them, and then I don't even remember how much I paid for the thing, but you pay about a year, wasn't very much. And just for him to come out there would have been more than what I paid for the deductible and what I paid for the service. And then another time I had a rental property in Minnesota, and the uh, the heat went out. My renter was calling me. It's super cold. It was like in November or January time, very very cold. I called the 800 number, and they sent somebody out there to fix it. So I definitely recommend to look into getting a home warranty if you're not very handy. So in that case, I was able to get the house fixed. My renter was happy, and I didn't have to leave my house. I just had to make a phone call, and it was taken care of. So as far as like freelancers, I was remember talking to my friend Andrew, and he was saying he wanted to buy a home, but he didn't know how he was going to do it. He has money saved, and he didn't want to spend all his money to buy a home, but he knows that that's something he wants to do, because he'd be the first generation in his family to actually purchase real estate. So after talking, we started talking about a plan and the strategy. And once I was able to show him what he was capable of, him and his dad are thinking of actually moving forward and buying a property. So, like I said, the key of all this is strategy, understanding the rules of the game. If once you understand the rules, you can win the game. But a lot of us are out here playing the game and not knowing the rules, and that's how you get declined. That's how you think things are more expensive than they have to be. And usually, a lot of times, things are most expensive when you don't understand. So you may not have to be an expert like myself, but what I plan on doing is educating people so that they know at least the fundamentals, at least be able to have a conversation and understand what the next step is, what's going on. A good loan officer should have the proper expectations and explain to you exactly what is going to happen in this process, so that when things do come up that are unexpected, then it's not um, such a shock or whatnot. Like if you pull someone's credit and they have issues on the credit, you have to have that conversation right at that moment. Hey, what happened here with this cell phone bill? It says we went to collections for $250. Tell me about that. And then we got to write a letter of explanation explaining what you tell me. And then, you know, if you have issues that we find out later, and then you hide that from the loan officer, that's going to put you at a disadvantage because they're on your side. They're like, let's say the underwriter is the judge, the loan officer is your attorney, so they're your representation, and they don't get paid if the loan doesn't close. So the realtor, you, and that loan officer are all in the same team. So um, a good loan officer should explain that to you and let you know that they're on your side. But they're not always a good loan officer that people are working with, and that's why they have, I guess, negative thoughts about people in real estate because they're not looking at it as um, your your job is to try to help get this person a home or help them get a car, or whatever the thing is. That's your job, and that's what you should want to do. And if you don't enjoy it, you shouldn't do it, in my opinion. But as far as the steps, what I would say is if you don't have a loan officer or a realtor, reach out to me. I'll make sure I have my Instagram in the description. First thing, it's like if we're gonna have a barbecue, and I make a list of all the things I want to have for the barbecue, but I go to the grocery store without my wallet and then I don't have my phone, so I can't pay for the groceries. So the first thing that I recommend you do is get pre-approved, get a full commitment letter from a lender, then you can start shopping. If you don't know of a lender, reach out to me. I'll help you find a good lender. But my goal is to help 100 families purchase a home. That's a goal that I'm planning out. So I hope that you're one of the people that I help. Feel free to reach out to me. I'll answer questions and help with strategy sessions to help you get on that path. And I appreciate you joining our Fun Day Friday call. And we'll look forward to speaking to you next week. Peace.